If I could only hold on to one single dividend growth ETF forever, this ETF would need to have a lot of important qualities. The ETF would need to have a long-term historical track record of paying dividends, but also would have to be an ETF that has massive capital appreciation along with that. But wait, on top of that, this one and only dividend ETF would also need to have a healthy amount of dividend growth, which means the ETF is going to pay me more and more over time. Now, maybe that sounds like asking a bit much, but the Vanguard Dividend Appreciation Index ETF, or ticker symbol VIG, does offer all that and more. In this video, I'm going to explain why the Vanguard Dividend Appreciation ETF VIG would be the one and only ETF that I would choose to hold on to long term if I, of course, for whatever reason, were only able to hold on to one dividend growth ETF for the rest of my life. We're going to go through all the reasons why and more right after you please drop a like on this video and subscribe for more future content like this. So heading over to the Vanguard website, which is the company that created the ETF years ago. Vanguard says that the VIG product summary is the following. VIG seeks to track the performance of the S&P US Dividend Growers Index. The fund is passively managed, full replication approach. The fund remains fully invested. Large cap equity emphasizes stocks with a record of growing their dividends year over year. And of course, VIG has an expense ratio of just 0.06%, which is one of the cheapest ETFs in the game. Now, some more key facts about VIG. The fund was created in 2006. Currently has over $67 billion in assets under management, making it one of the largest ETFs in the world, and offers a trailing 12-month dividend yield of 1.9%. So this ETF does not offer the largest starting dividend yield at 1.9%, of course, but as you see, VIG has had some massive capital appreciation since 2006, and on top of that, stay tuned because I'm going to show you what this ETF has that many other dividend growth ETFs do not. Another very important aspect of the Vanguard Dividend Appreciation ETF is, of course, the holdings and the holdings breakdown. With VIG, technology is the largest portion of the overall portfolio at 22.71%, and because of this, technology stocks having a higher beta, this means that the fund is going to appreciate as far as price a lot faster when the overall market moves up. The next biggest portion of the ETF is financials at 17.66%, healthcare at 16.09%, industrials at 12.53%, consumer defensive at 12.07%, consumer cyclical at 7.38%, basic material at 4%, energy at 3.18%, utilities at 3.12%, and communication at 1.25%. Now again, to go back to the title of the video and of course the original question at hand, if I was only able to hold on to one ETF, that was the question. This is another reason why. The top 10 holdings in the VIG ETF out of the 317 holdings that the ETF currently has are some of the most bulletproof companies in the world. Now, all these companies have a lot of things in common, but a few of them being that they all do pay dividends. They've all, for the most part, had some decent or very, very substantial capital appreciation as far as share price. And best of all these companies have consistently raised their dividends, historically speaking. Now, these top 10 companies are companies like Microsoft, Apple, United Health Group, ExxonMobil, Johnson & Johnson, JP Morgan, Visa, Procter & Gamble, Broadcom, MasterCard. And I want you guys to comment down below, what is your number one favorite top 10 holding if you were to have to pick one out of the top 10 holdings in the VIG ETF. Next, looking a little bit closer into this ETF's starting dividend yield and historical dividends paid. VIG has a trailing 12-month dividend yield of just 1.9%, which, like we said earlier, isn't the biggest starting yield in the world, but with an ETF that has the capital appreciation that it's had historically and the dividend growth that it's had historically, the starting dividend yield might not matter if you are going to hold onto this ETF long term. Now, what I mean by this is simple. If we look at the last dividend paid by VIG, as far as March 23rd, 2023, it was 75 cents per share. And this ETF does pay a quarterly paid dividend, but if you look back just a few years ago, let's go back to 2020, for example. This same ETF was paying 47 cents, 60 cents, 56 cents per share per quarter. So once again, now as of recently, it's paying around 87 cents, 75 cents, and just a few years back, it was paying around 20+% less per share per quarter. Now, if we were to go all the way back 10 years or so, this same ETF was paying roughly half of what it's paying today. So what that means in simple terms, for investors that, for example, invested into this ETF back in 2014, they are now receiving 100% higher dividends paid compared to their original dividend that they were receiving back around 10 years ago. And to dig even deeper, looking at some of the more specific data, the dividend growth rate for the Vanguard Dividend Appreciation ETF has been very, very solid, and we have lots of years to go off of. The dividend growth rate on the 3-year time frame is 10.8%, which means that over the last 3 years on average, VIG has raised their dividend around 10% per year. Now, over the last 5 years, around 9.4% is the average 10-year time frame, 9.61%, and VIG on the 20-year time frame is at 14.32%. So if we were to assume that the annual dividend growth rate was to continue to go up around 9%, which is less than it has done historically on multiple different time frames, these are some of the future dividends that we could see in the future. For example, in 2024, VIG could be paying around $3.54 per share per year. By 2025, we could see $3.86. By 2026, we could see $4.21, and so on and so forth. As the compounding gets bigger, the numbers get bigger. And by 2033, in theory, just going off of an annual dividend growth rate of 9.09%, which of course, keep in mind, just because dividends historically raised at a certain rate or lowered at a certain rate, etc., does not mean that they're going to continue to do so in the future. It just means that we're building a model off of some of the historical data provided. But by 2033, in theory, this dividend growth ETF could pay around $7 or more per share per year. So now that we've looked into the very diversified holdings into this Vanguard dividend ETF, looked at the dividend yield, and of course, my favorite portion of this entire ETF, the dividend growth rate, or how fast they have raised their dividend historically. The last thing we have to look through, of course, is how VIG has performed next to the SPY or the S&P 500 on the 5-year time frame. And as we can see, because a lot of the holdings do overlap with the SPY, VIG tends to trade pretty much right alongside the SPY. The Vanguard ETF returned over 70% over the last 5 years, and the SPY returned over 73%. Making, of course, both options, the SPY or VIG, great long-term investments, in my humble opinion. So there we have it. There is the one and only dividend growth ETF that I would hold on to for the rest of time if I, for whatever reason, was only able to hold on to one single dividend growth ETF forever. But the reality is that the great thing about the market is that there's so many high quality different dividend growth ETFs out there that dividend growth investors like myself and like a lot of you can invest small amounts into and build a well-rounded diversified portfolio with different pieces of different stocks, ETFs, etc. But I want to hear from you guys down below. If you, for whatever reason, were forced to answer the question, what is the one and only dividend growth stock you would hold on to forever? If you, for whatever reason, were only able to hold on to one more until the end of time, comment it down below. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks as always, guys, and I'll see you in the next one.